Hey guys, José Jaén, directly from Dubrovnik in Croatia. I wanted to take the time to record this video. I have a few ideas that I wanted to share. They are not exactly good news, and you have seen the headline, well, the idea that I'm sharing on the first screen. American Airlines will go, guys, will go to $2.20 before November of this year. And I know it's not exactly what you want to hear. You want to hear a lot of good news, a lot of this sort of V recovery. It's not happening. I have expressed this with my previous publisher. It's a W recovery if we're lucky. If we're lucky, the market, there's a dislocation between what is happening in the market and what is happening with the economy. The problem with that is how we set up the reality versus understanding that what takes place in equity markets is not exactly what will take place in the economy. Not because you see one stock going up, taking advantage in the short term of a market disruption, that means that everything is good. It's not roses. And that's what's happening with American Airlines. It doesn't matter how much the Federal Reserve, they want to help. That's really good. I do believe it's good to help with certain limits. And it's nice to see the Trump administration, the White House, everyone connected, the Senate doing a lot of great things for Americans. I would love in Europe to see the same willingness to help, a little bit more synchronization between Germany, Netherlands, Spain, and Italy. That I think it will be nice. But nevertheless, if it doesn't happen, what we can do, we just have to hope for the best, do the best we can, and keep going. I don't make the market. Things happen, they take place, and I just put them together for clients. That's what I do. And I want to share with you this exactly as it is. I see American Airlines going to $2. Probably I will say even $1.30. Let me show you exactly how I figured this one out and why it will happen before November of this year. Okay? So now I'm just going to move myself. Whoops, there we go. I'm going to start just on the technicals. I think better, let's take a look at a little bit of fundamental. Today in the Wall Street, the Times, the New York Times, they have these reports that you get all the time. I do have a subscription. I totally encourage you guys to support one of the best inks that I've seen. The way they write just great. And I think everyone should have one of these subscriptions. Please go ahead and if you have the time, support financially, get a subscription to the New York Times, one of my favorites. And I want to take a look, just pay attention to what they're saying, the headline. Airlines are burning through $10 billion a month. That's $10 billion a month. And this is coming from reputable sources, like original sources. Executives are telling you this is what is happening. And one of the situations, one of the ideas that I have is the reduction of hours. The first thing they try to do in these cases is just to cut hours. What we have to understand, there's certain amount. Oh, we're going to the microphone. There's certain amount of hours you can cut. There's certain amount of employees that you can let go, and it seems to be the one-on-one path when it comes to executives, just to try to save money. They cut people. But also that comes with the expense of affecting the quality of your business, the quality of the service your business is supposed to deliver. So always pay attention to that. There's a limit that they can do that. Now, also there's a limit of how much money the government can help with. They just cannot just extend an infinite amount of dollars. Probably they can with the Federal Reserve. It's not the point. It's not the point, because later on you're just throwing money into a zombie company. Think about, for example, Amtrak in the U.S., the train company. That's an idea. So look at this, and when I read this, I just get very scared as far as understanding the danger that all those workers are going through, the danger of losing their jobs and don't have an opportunity to make a comeback, and what happens if they lose their jobs and they get no severance. There's no pension waiting for them. That's exactly what I will be concerned. And that's a little bit of danger. You're working for so many years, and then suddenly these companies may go bankrupt, and there's no money to pay for those liabilities. If you think about it, those are liabilities. Now, the second idea, probably 5 days ago, in the newspaper USA Today. This headline, I don't know how to read this. I'm not sure if they don't want to create more panic, or if they're just trying in a sort of way to communicate that it's really difficult right now. And there's no words to convey the urgency of the airlines in the airlines, the industry in the U.S. It's not only in the U.S. Lufthansa in Germany, here in Europe, over this area, they needed a package, stimulus package, to be bailout, basically. Also, you have in France, you have Air France receiving another package. These airlines, they need help. They cannot sustain themselves. Those businesses are they're capital intense. I think that's the expression, capital intense. And they require a lot of capital on monthly basis to function. That's how they actually work, and they burn through cash every month. So this is what you have to understand. If they don't have that coming up, that all revenue coming up every month, it's like cutting the water. You cut the water supply, and eventually the river dries up because there's no other way. It's not raining. They need that flow of, in that case, the river needs that flow of water. For example, for another area, exactly the same. These airlines, they function. They need that constant revenue coming in. They need people to travel. They need tourism. They need business people. It's all a function of flowing. The money has to flow. And what happened is these lockdowns, that money, that energy, that blood, it's not flowing, and it's really difficult to restart it. And that's the challenge. So with all this, let's take a look at the technicals real quick. Now, I'm looking at American Airlines. This is the daily chart. If you follow volume profile, it's easy to see if we were to have a lucky strike and suddenly this whole thing pops and goes, the highest I can see American Airlines will be $15. And that will be it. You will have 1, 2, 3 levels. Let me just zoom this. 3 strong levels. Where you will have, let me move myself over there. You will have 3 levels, 1, 2, 3, and then you will have the 50 exponential moving average. It will work serving as a strong resistance. Keep that in mind, okay? And then you will just crash. I don't see American Airlines having any chance to break through this resistance. It's just impossible. You have a high density of accumulation. It's already in a sea of executed volume that makes difficult. It's very challenging for the price of this particular stock to break through this level. In addition, you have 1, 2 touch levels on resistance between 13 and again that will be 1270. Keep that in mind. If, for example, I go and take a look at this, you can have trend Fibonacci just to give us a better mapping. And let me move it, adjust it to this level. If this is the case, we're really reversing initially. It comes the impulse, push. Let me show you with the brush. Here is impulse, pullback, impulse, pullback, impulse. And let's say, for whatever reason, we have that next impulse. It settles at 38.2% Fibonacci, and then it can retest back the $9.15. We're trading somewhere around $10.30, and then one more attempt and crash. The way you measure this area is you take the price range all the way to this initial level where we started to see the crash in the last resistance at $17. And then you take this level. I will take the 38.2%. We're talking about $8.11, $8.10. And you project from 38.2 down. That gives you $4.20. So far, so good. However, let's keep exploring the charts. Let's move to now. Let's take a look at the weekly. Let me remove all drawings. And this is the weekly. Again, just follow the volume profile. Again, see, I want to take a look at this. Take a look at these rejections. This is the current rejection. This is where I see maybe another attempt to $12. There will be the $12.80. It wouldn't surprise me. It's not sustainable. It's not sustainable. Simple. The idea is that they're not making any money. And if you take a look, one more fundamental idea is even if you open the economies, okay? Think about this. Even if you open the economies, who is flying? There's more than 5 million Americans without a job. And then it's not different in Europe. They said in Spain they have about 300,000 new requests for what is called the paro, which is sort of the welfare that they have in Spain. And God knows what is happening in Italy and the rest of Europe. And not even mention France, where they're talking about when everything is said and when the dust settle, there will be close to 10 million citizens in France without a job. Okay? So the numbers are really scary. Now, if this is the case, and you can see we have another formation where we're rejecting. Now we're rejecting the point of control. The point of control trades around $10.50. This is just the beginning of another leg, a lower leg. And that's what we have to pay attention. That's what we have to pay attention. A simple idea at this time, I will say, is just the defense of this level, $9.30. And as soon as we retest the $9.30 mark, we're ready to go to move lower. Now, at the same time, take a look at here. Let's take a look. See this. This is entire what you have on the volume profile. Massive resistance at this level. Strong executed volume that prohibits American Airlines to go up. It's challenging for the stock at this time. Now, the final view that I want you to have is this. Let me take you to the monthly chart, and this is exactly when you're going to just open your eyes. Here it comes. You don't see it yet? Just wait for it. Here we go. Let me again just have to place myself somewhere. Okay, and here is. Where clearly this is a bearish trend. Usually what we have is this bullish, see the bullish trend, bullish bar, this bullish candlestick. It may lure you, seduce you, and think there is a rebound opportunity. But what it creates is a continuation doji. The idea is this. You have the bearish candle, goes down, then you have the doji. This makes you think there's a reversal coming. Never happens. There's indecision in the middle, but it's just then a bar opens and crashes. It goes to the downside. That's a typical pattern for bearish continuation. If that's the case, exactly what we're going to see is, let me go back. And, okay, now let's remove the drawings. And we have two scenarios. Number one, prices will trade at $4.20. But then we have an issue. Back on July 2008, the low for American Airlines was $1.45. You can see it around this area. You see it there? $1.45. That low created what we call in technical analysis or supply demand, it's a virgin demand. It's a virgin demand. And slightly was touched at some point. Not fully. We can argue it's not virgin, is virgin between March 2009 and July 2009. I will consider it as non-closed cycle. That means that prices haven't closed the cycle, and therefore there's a huge area that must be closed. And the way it happens is like this. There you go. You have, let me bring the brush. And this is the bottom of that cycle. Close this, finish the offer. This is the offer, supply, demand, supply. And then it closes back to 145, 130, that can be. And this is the cycle, the full cycle. The full cycle took American Airlines about 12 years to finish. This previous cycle was, this is the reason why American Airlines went all the way went all the way up to this level, is because they have a cycle around $56. So at some point after the great financial crisis, 2008, 2009, you can see the same happen. You have this level, prices created that offer, and close the cycle. Now this has to close the cycle. It took 8 years. Now it took about 2017. It took about three years to do that. It will take about 3 years. Now, if that's the case, it's October 2017, we're looking about November of this year to take place. And that's why I see how easily we can have American Airlines trading at least at $2. I don't find satisfaction to explain this news, to explain these trading ideas, but we just have to protect ourselves. The best we can do is for those that you have portfolios, just to prepare yourself. If you have shares, this will help you to offset some losses. I know in the media, everyone's talking about Warren Buffett, what he did. The number one thing that caught my attention is the fact that he admitted the world has changed. The way we travel, the way we'll continue to travel will change. And there's no enough room for all these American Airlines, or for all these U.S. names in the airline industry in America to survive. American Airlines, at least based on this technical information, based on this analysis, based on how the fundamentals are shifting, and even the decisions they are making to save the company, there's no reason to deny what is in our face, what is in front of the charts. We have room to go all the way to $1.30. But I'm calling a short position on American Airlines, and I'm going to share with you exactly how I express the idea, what vehicle I'm using. This is the American Airlines November 20, 2020, $2 put. The strike, $2. Right now, trading the last pricing, the ask was going for 40 cents. That means that per contract you're paying $40. The spread, it's highly liquid. You have only 2 cents between the bid and the ask. There is an open interest that I was surprised to see how high it was, how high it is, almost 4,000. There's a little bit of action. The volume yesterday was not too much. I would prefer to have a daily volume of 1,000 if that's the case. However, I do notice, and it's key here, it's key at this moment is to note how there is activity already in the November strike $2 put. So this is how I am expressing my view, and I think all of you should take notice and buy some puts. Just $40 per contract. It will help you to, if you have other positions in airlines, or if you incurred in losses so far, you may offset your losses with this play to the downside. Sadly, this is what I see. Again, I'm not super thrilled to do this, but my job is to offer hedge to our traders, to investors, and to my clients. Until next video, please, if you have time, go ahead, subscribe. I will keep producing these videos for you guys. And if you have any questions, please reach out to me. And anytime, leave a comment on the comment section, okay? Thank you so much, guys, and have a great trading day.